Standing by to talk to us is Westpac senior currency strategist John Callow. Good to have you on the show, as always. Is the Aussie dollar overvalued, as is the idea of a Bloomberg survey here, about 27% against most other currencies? What is your take?
I don't think so. That was certainly a very interesting story, and you can make that case through purchasing power parity, which I guess is something that people, visitors at least to Australia, do find some of the prices pretty high. So that would make the Aussie dollar seem a little stretched from that point of view. I'm sure when Oprah and her friends turn up here, they'll find a bit of sticker shock at some of the retail prices here. But as far as the commodity prices, given where Australia is in terms of the risks on the RBA, the level of commodity prices and the outlook for our major trading partners, in particular China, I don't see the Aussie dollar as overvalued at this point.
But some would argue there are a lot of good news already priced into the Aussie dollar. There's rather a larger risk for disappointment. Would you agree?
Yeah, look, there's definitely a risk. It's not cheap, I think that's fair to say, and certainly if there's any substantial slowdown in China or a return to, for instance, some of the funding issues that we saw in the global financial crisis, the Aussie dollar can fall a long way in a short amount of time, and we even saw that in May with the Eurozone debt crisis, which really shouldn't have had much to do with the Aussie dollar, but still caused it to drop 12 cents. So I think it is fair to at least say that there is plenty of good news priced in.
So where do we go from here now in terms of the RBA? And also, if you allow me to throw a comment from one of your colleagues in the currency markets at you, John Taylor at FX Concepts sees the Aussie actually testing its record high in 98.5 US cents. What do you think?
I think that's actually a growing possibility over the next few months. It doesn't mean that there are no risks to the Aussie at all, as we've identified, and RBA Governor Stevens made that clear in his speech earlier today, that there are risks to the Aussie dollar, but if those don't pan out, if they don't come true, then the Aussie can push higher. The RBA has sounded really quite hawkish today, and that's a very stark contrast to most of the world. And so I think particularly one of the key factors will be whether the Federal Reserve goes ahead with quantitative easing, because there's certainly no deflation threat in Australia, and it would only underpin the yield attractiveness of the Aussie dollar to foreign investors, particularly those in Asia.
Yes, I was going to add that the RBA can't get too much ahead of other central banks around the world, right?
Well, their focus is very much on domestic inflation. They're yet to show any particular concern about an excessively strong Aussie dollar. It is a very stark contrast, particularly across the Tasman in New Zealand, where they've got a strong Kiwi dollar, but they don't think it's justified. We haven't yet heard that from the RBA, that they think that it's excessively strong. So I doubt that's going to be something that would stop them hiking rates if they thought that it was warranted.
We have to leave it there. Thank you so much, John Callow, there from Westpac.